everyone. Welcome to the October Taxation and Economic Development Policy Committee of Ellevate, Louisiana. My name is Julie Stokes, and I'm the founder and CEO of our group, Ellevate, Louisiana. I served in the state legislature on House Ways and Means Committee and as a CPA by trade. So I'm really looking forward to the conversation today. We're going to be talking about a persistent issue that the state has faced, our lack of a centralized sales tax collection method, and our misaligned sales tax base, which has been made a little bit better, but still not perfect. Before we start, I want to briefly recognize our co-chairs of this committee, Jay Calhoun and Phyllis Sims. I don't think Phyllis is here with us today, but Jay is. Both have had expansive careers working on tax law and policy in Louisiana, and we're just grateful to have them leading this committee. And today we have Ellevate member Leonore Heavey, who is joining us to talk about Louisiana's fragmented sales tax structure and what has stood in the way of reform and streamlining our base. Leonore is the senior tax counsel for COST, the Council on State Taxation. She worked for many years in the Louisiana Department of Revenue and then as a senior attorney on the Revenue and Fisc Committee in the Senate. She has her JD from the University of Idaho College Law, her Master's of Laws in Taxation from the University of Denver, and is a member of the Louisiana and Washington State Bar Associations. And together, Leonore and I kind of went through a lot with taxation and tax reform in Louisiana. She on the Senate side as the primary staff person on that committee in the Senate, and me over in Ways and Means, really caring a lot and wanting to change the world. And it was some tough times. So Leonore, I just want to thank you for joining us today. And I just want to hand it over to you to get us started.
I just wanted to say, so Leonore is kind of the perfect person as we, as a group, try to get our arms around these issues and understand it for a couple of reasons. She's currently with the Council on State Taxation, which is a trade association that represents business groups. But for many years, she worked for the Department of Revenue. And she was that person that knew the answers to everything. Like if you were trying to go up the chain and get information, all roads kind of ended with Leonore because she just was so smart, knew so much. So she's got that kind of civic-minded government background, understanding kind of the needs of government, and also now that and then she had her stint in the legislature, helping with tax policy. But now she's in private practice on the other side of it. But she's had her feet in both camps, and so I know a lot of times we worry about getting on these meetings and hearing from only one side. I think Lenore's kind of got that perfect place where she understands that we're really kind of all together in this, and that the government's interests and taxpayers' interests are really aligned. And so hopefully she can help us kind of understand, some of the messes we've got ourselves into here in Louisiana.
Yep. Yeah, we're so excited to have you here, Leonore.
Good afternoon. It is lovely to be here, and I see a lot of people in the meeting that have been in the advocacy space for many years. So I think a lot of you have kind of like been in the trenches with us, dealing with these issues. Maybe not directly, but you've been listening to the conversation for a long time. So super quick slide deck, really just kind of setting the stage. And so Jay already mentioned what COST is, but essentially our mission is to preserve and promote equitable and non-discriminatory taxation of multi-jurisdictional business entities. So our members tend to be the larger corporations that operate multi-state, multinationally. These issues in Louisiana are of deep concern to many of our members. And again, with our mission, we view taxation, we are not a no tax organization. There are organizations out there that give you points or take away points or give you a better score or whatever it is for completely eliminating a tax. We don't do that. Our members understand that in order to function as a society, that taxes do need to be collected, and so that policy goals can be achieved when money is needed, and money is almost always needed. So, but we look for equitable taxation, so it deals fairly and evenly with all concerned taxpayers. it is non-discriminatory. If businesses that operate in multiple jurisdictions do not bear a greater tax burden than businesses that operate in a single state, and a tax is being economically neutral if it doesn't influence the choice of business. So for example, a tax that used to influence the choice of business was the corporate franchise tax that was only employed if you were a corporation, but not if you operated as a limited liability company. And that definitely drove a lot of choices of form of business, where it wasn't the business of doing business that was driving the bus on that one. It was in fact the tax policy. So that has been done away with, so that we no longer have to worry about that particular tax influencing the choice of business. All right, so again, where we kind of fit into this space. Cost, we educate policymakers and the public regarding tax systems. We educate policymakers and the public regarding those systems' impact on business, jobs, and investment. And then we evaluate the state and local tax systems to determine whether statutes, rules, legal decisions, and policy that govern the tax administration are in fact fair, efficient, and customer focused. And to that end, we produce 4 different scorecards where we evaluate the laws and regulations and policies that are in place in any particular state. We do a sales tax scorecard, a tax administration scorecard, a property tax scorecard, as well as an unclaimed property scorecard, which is kind of a little like, sort of problem child that doesn't really belong anywhere. So I think we took that one on. We'll talk about the sales tax scorecard in a minute. And so we spend a lot of time working to improve tax administration where it's not fair, efficient, or customer focused. And ideally, we will be doing this in partnership with tax administrators, because our scorecards are not in any way, shape, or form evaluating the administrators. They are evaluating the statutory and policy environment in which these administrators are working. And so over the years, COST's board of directors has adopted several policy positions in furtherance of that mission, and they cover a gamut of state tax administrative issues, corporate income tax issues, sales tax issues, property tax, and other issues. Again, we're focused on sound tax policy principles. And so again, we are basically we will only adopt this if we get essentially complete member buy-in. There are situations where we have members who are kind of on either side of the fence, and then we will steer clear of that issue. We'll talk about it, but we're not going to necessarily take a position on it. All right, so we basically do a tax burden study every year with Ernst & Young. Because one of the things that will happen in any tax policy discussion is that you will hear that businesses don't pay their fair share of state and local taxes. And so what this is showing essentially is, this was in FY 2022, showing essentially the composition of taxes that are paid by, and this is all states, all business, and so you can see essentially just kind of how that breaks down. And so sales tax, and this is sales tax on business input. So this is not sales tax that's collected by business on sales to their customers. This is actually paid directly by the business on business inputs that the business buys to operate the business. That's a lot of use of the word business, but you get the point. And so I guess the take home on this one is the bottom bullet over on the right, where businesses' share of state and local, and if you hear the term SALT, that is our shorthand for state and local tax. So businesses' share of state and local tax nationally has been around 44% since FY03. And when the 23 numbers came out, those were very similar as well. And next we'll talk a little bit about how that breaks out in Louisiana. So this is for FY 2022. So you can see it's a much bigger share than the national share of sales tax on business inputs. So in addition to businesses collecting sales tax from their customers and remitting the sales tax, on behalf of the state or local government to those entities, businesses are also paying sales tax on things that they buy and use in the business. So it's sort of a two-part issue for businesses. It's not just sellers in the retail space. It is companies that manufacture things. It is, really every business is going to buy some items that are not exempt from sales tax, and so they get looped into this morass, if you will, in their own behalf, not just essentially as they collect on behalf of their customers and then remit to the appropriate taxing authority. So we do have a policy position on sales tax, and you will be getting a list a list of resources after that, and I've included in that list of resources our policy position on sales tax. This is really just administration, and so again, this is the position is just it's got to be easily understood by consumers, by the businesses that are collecting on behalf of the taxing authority, and ultimately, ideally, the tax will only be imposed on the ultimate consumer. So the essential components there are single statewide administration, uniform tax-based definitions. So we hit the top two right away. Simple rate structure, efficient filing procedures, and a seller allowance to cover the cost of collection. I'm going to take a little bit of a sidebar here. So in Louisiana, we call this vendor's compensation. And so something that if you are not familiar with sales tax, do a quick 101 on sales tax. So sales tax is essentially, again, ideally charged only to the final consumer, but a sales tax is imposed on sales of all tangible personal property or goods, unless there is a specific exemption carving out that particular sale. And those exemptions may be because of the thing that's being sold or the purchaser or the nature of the purchaser. And so those will be exemptions now, whereas, for example, sales of services are not taxable unless those services are specifically enumerated. So again, general rule, goods are taxable, services are not. And then we spend all our time in the exceptions.
And can we say, like, for exemptions, that the types of exemptions that exist in the law, because I think a lot of people are
Right.
there's a lot of
So-
information about that, like what kind of things are exempted.
Right. And so there are, I think when Julie was a state rep, something that she would call essentially like parts of your parts of your tax system that are just ordinary pieces of your tax system that everybody has. And one of those is a sale for resale exemption. So if I am a book, if I am essentially a bookseller and I own 5 retail stores and I buy my books from the publishers, I'm not keeping those books. I'm not using those books myself. I'm going to be essentially sending those books to my stores for them to be sold to final consumers. And so so I will not have to pay tax on that purchase if I'm purchasing those items for resale. So that is a big one. And that actually is, it's a fairly substantial number. But again, every state has this. So this is not something that's unusual or outre. It's something that, again,
That's to prevent pyramiding of taxes. So if
correct.
my
So-
bookseller has to pay the people they buy the books from tax when they purchase, and then they turn around and collect tax from us when we purchase it, that tax is going to get passed along. So when you buy the ultimate product, it's going to have multi-levels of tax if you don't exempt tax transactions that happen up until that final point, right?
Well, right, and that's one of the problems with Louisiana's very heavy reliance on sales tax that is basically charged at those interim levels, where something that is purchased by a manufacturer, for example, that is not going to ultimately end up identifiably in the finished product. Many of those purchases are subject to sales or use tax, and so the problem is then the final consumer, when that good is ultimately sold, doesn't really know how much tax they're in fact paying on that product, because there is some hidden tax that's baked in, because there has been tax that has been charged at multiple levels of the transaction. And to me, one of the things that does is it hides the cost of government, if you will, because we really don't know how much tax we are in fact paying. And it looks like a business is paying this tax, but they're not. We as the consumer are ultimately paying this tax. And I don't know about you, but I like to know, I like to know how much I'm paying for something. So this is just an odd little space. But ultimately, talking about whether if I'm that bookseller, the tax is not my tax. If I pay income tax, that's my tax. That's basically tax that I have to remit because I made money. Whereas sales tax collection, that's never my money. That essentially is the state or local government has essentially almost has me as sort of this agent for them. And I am in fact collecting those taxes and remitting those taxes to the appropriate taxing authority on their behalf. And so, and if I abscond with that money, they will come after me and I will be personally liable for that. So that this is where circling back to the seller allowance. That's why having some sort of seller allowance or vendor's compensation to cover the cost of collection is important, because it is not the seller's liability. It is, again, money that they are collecting from their customer, directly from their customer, and then remitting directly to the taxing authority. And yes, it's a cost of doing business, but if for example, if I operate as a seller in a space where all I'm selling is exempt goods, I don't have that cost of business. Whereas other sellers who don't operate in that space will in fact incur that cost. So some sort of remuneration to cover that cost is something that we believe at cost is vital to a fair state and local sales tax system. All right, then adequate notice of law changes is important. So for example, and Julie, I know you saw this all the time, and I know you never did this, but some of your colleagues in the legislature would want to create a brand new exemption, and they would want this brand new exemption to go into effect on July 1st after, the session concluded in early June. Well, the sellers don't have time to make that adjustment in their systems midway through a month. The taxing authorities don't have the ability to make that quick of a change. So ideally, you give new changes should happen at the beginning of a quarter, and not the quarter, and you give at least 60 days notice of some sort of a change, whether that's a rate change or an exemption change, to just give both the sellers, purchasers, and the taxing authorities an opportunity to actually adequately administer those changes. All right, and then our sourcing of sales. So we in Louisiana have something that's called destination sourcing, and what that means is essentially you charge the tax where the item is going to land. So if there's some squish there. So for example, if I live in New Orleans, if I go to Baton Rouge and I go to Barnes and Noble and I buy a book there, they're going to charge the Baton Rouge tax because they don't know I'm going to New Orleans. But but ideally, what we do here is essentially where the item is going to ultimately end up being used is the goal. Again, it's not perfect, but we get pretty close here in Louisiana. Yeah, talking about the scorecard, and again, we'll blow through that. I will include a link to the scorecard in the materials that you get afterwards. And this it'll go into a lot of detail about what all these different categories mean that we evaluate. So, and you can see, there we are in Louisiana, along with our sister states of Colorado, Mississippi, Alabama, and South Carolina, with an F in the sales tax scorecard. And again, remember, this is administration. Now, a big piece of this is and I think we actually are only 1 point away from being a D, which is not great, but at least it's passing. But centralized collection, that the lack thereof actually has a big part in the reason why we have an F. Alabama is in that same boat along with us. Colorado the same. Now, Arizona recently made a change to their sales tax system. And we'll get into that shortly. And so they moved from an F to a D, but all is not well in Arizona. So one of the things you can see on here are some of the states have hashtags. Regardless of their grade, they'll get a hashtag. What's that about? Well, those are states that are members of something called the Streamline Sales and Use Tax Agreement. And so those states have figured out that what they do is they use this organization, Streamline Sales and Use Tax Agreement. They all have they use those definitions, They have a single statewide collector if there is a local sales tax. The state or an entity, not necessarily the state, but there is a single collector and an administrator for all of the sales taxes that are levied in that state. And then they have, and so what happens is that when a vendor decides that they want to start selling product in multiple states, and we see this so much now with the ever increasing number of sellers who are selling product that don't have a physical presence in anywhere, perhaps but the state where they have their warehouse, selling in multiple jurisdictions, you can buy anything from anywhere, right? And so what these vendors will do is they'll go ahead, they may sell things into Louisiana and Texas and, California and Colorado that are not streamlined members, but they're going to have to individually register with those states. But with the streamline members, one single registration will actually go ahead and register them in every single streamline state. And so it is just really easy to do business then. And then those states are guaranteed to actually collect the sales tax revenue that they are in fact owed. Whereas we in Colorado and Alabama, and quite frankly, Arizona, are so far away from that. It is definitely it's more than a moonshot. I think Julie, that's in our wildest dreams. One day we hope that will happen. But again, it makes it so easy for a business to actually comply with your state sales tax, which means that you don't lose that revenue because you've made it hard for a business to comply. Okay, so
a question, Lenore. The one thing that I see being absent on this map of the United States are any A-rated sales tax jurisdictions.
Correct.
Now, there's got to be somewhere like that's, I would think all these state streamlined sales tax agreement states should be fairly well high ranked. Why are they coming out nobody with an A?
No, isn't that, I know you're not wrong. It is actually kind of wild. So, I mean, it's really just what we use for scoring. Centralized sales tax is a component, but it is not everything. And so, I mean, again, you've got Texas over here. It is what percentage of do you have broad exemptions for business inputs that are purchased by businesses? Is your sales tax collected primarily from end users, or do you have those interim levels that cause the pyramiding that Jay was talking about? Do you have fair sales tax processes? Or do you have fair audit and refund procedures? So for example, I mean, a state may have a great centralized collection system. They may have equalized interest rates for assessment of refund issues, but it's almost impossible to get a refund out of them. For whatever reason, if a tax is so again, this is or the auditors are really, really difficult to work with. They're not the auditors themselves, but because of the system that's set up, the audit process is very difficult. So it is a multifaceted. That's the one thing that's interesting about the scorecard. It is certainly, if Louisiana moves to centralized collection, we definitely improve our score, but we don't go all the way up to A because we have a lot of other work to do.
I thought that Mississippi was a ton cleaner on sales tax than we were. Why are they ranked F?
Well, and again, that's because essentially you can't again, centralized sales tax collection is not everything. It's a lot, but it is not everything. So let's go ahead and just let me go take a look.
Let me ask real quick though, my impression of the cost scorecard, obviously it's kept to kind of, I guess get the sense of what businesses think about this, but and I know I've heard it in the legislature. Like, in other words, people, legislators, when they're considering different legislation, have mentioned where we are on this and would it improve our score. Why do they care? Like, what is the significance of doing well on this or any other measure of our state's tax system?
And I think that's a fair point. So I think if you are looking, for example, to expand operations in a particular state, if you're a business and you're looking to expand operations in the state, you want to go to a state that has a business environment. You can look, it is very easy to just go ahead and just go online and very, very easily find out what a rate is, right? What a state's income tax rate is, what their sales tax rate is. What you don't get by looking at the rates is all this behind the scenes information about, well, okay, that's great, but what happens if I, like open some operations here? What are you not telling me? And so that's really kind of where the cost scorecards came down to. What is the policy environment in that we're operating under? And so some of the changes that actually have been made that improve our sales tax administration actually over the past few years actually have shown up, getting the Louisiana a much better grade on the overall tax administration scorecard. We moved from a D to a high, like a B plus, relatively recently. And so many of the changes, for example, now it used to be with sales tax that local jurisdictions were able to charge up to 18% a year for assessment interest. So if I was late remitting my sales tax, you could have charged me up to 18%, but the particular jurisdiction might only allow me to get 2% if I got a refund. And so in the relatively recent past, one of the changes that was made was to say, okay, local jurisdiction, whatever interest you're going to charge on an assessment, you have to pay that same interest when you're giving a refund, and you can charge no more on assessment than 1% a month. So, but those interest rate equalization changes we got credit for those over in Louisiana, credit for those over in the admin scorecard, not in this one, because this is a little bit more inside baseball. But anyone who wants to talk about this scorecard and kind of go into depth, happy to do that at some other point. But
yeah,
but we need to move on
because I have so many more questions. Okay.
I'm sure. All right. Okay. So, all right. So basically, again, this actually is a fairly big, so the deal if you actually go and look at the scorecard, getting points, it's like golf, getting points is bad. And so you're asking about Mississippi. So Mississippi essentially has, you can be, I guess, penalized up to 8 points for how you offer significant exemptions for business inputs, and Mississippi does not. So they pick up a 7 out of 8 points there. So that essentially, that pushes them, that added to their score significantly. The other piece, apparently sales tax process, they do more poorly than Louisiana. So in many of the categories, Louisiana actually does better than Mississippi. And the one category that's not is that centralized administration is the one area where Mississippi actually outdoes Louisiana. That's the only place where we pick up points, again, points being bad, that Mississippi does not. So hence the difference between the why they both get Fs. So they've got centralized collection, but they've got a lot of other problems.
Because doesn't Mississippi have a flat rate everywhere? Like every county has the same tax rate, I think.
I would just be guessing that yeah, I do not.
I think they do, yeah.
But that is entirely possible.
I've thought way too much about Mississippi, yeah.
I know, right? I think we all have. This is the business inputs that make up the total percentage of sales tax collected in a state that comes from the direct taxation of business inputs. And so you see Texas over here, and this is one of the things when people say, oh, we want to be like Texas. I point this slide out to them and no, you don't. Not at least in this area here. We do better than they do. And so that, again, there are multiple facets to this whole, like, how do you make your sales tax system better? Centralized collection and unified base being but two things that are very, very important, but are not the only game in town. So I just think the last slide is just, no, my gosh, I kept going on. All right, we'll skip this one over because I think we'd already talked about this, and y'all will have this, and that's my contact information. Again, everybody feel free to reach out to me at any point, and truly any of the, if you go to the cost website, really any of the cost staff will be happy to help you if you have questions.
Leonore, just thank you so much for sharing your time with us today.
Well, thank you.
It's so good to be with you again. And I know we all, many of us on this call know you personally, and we just really appreciate you and your membership in Ellevate. And at the end of the day, tax policy isn't just about numbers. It's about building a stronger and more competitive state. And our goal at Ellevate is to bring people together across party lines to work together on things like this, because there's always so much disagreement. And what can we find that we can agree on? And we almost always can. And I love it. I love this space that we're in. And really appreciate all of you on the call. And, for our listeners, thank you for joining us. And we hope you have a great day. If you're interested in these types of policy talks, check us out on Ellevate Louisiana's website, where you can learn more about our events, our policy committees, advocacy efforts, and how to join. That website is ellevatela.org, ELLEVATELA.org. If you enjoyed this episode, don't forget to subscribe, leave a review, and share it with someone who needs to hear it.